the weekly mastermind hangout. Sunday nights here in Australia. I'm back in Port Stephens on holidays, loving it. Water's warm and at the beach every day, so life's good. So last week we were talking about the dollar index and gold and bonds, and just how big those opportunities are going to be this year going forward, and certainly into next year. So we're going to just cover off on those. I think just first of all, however, can people hear me? So if you can just come down on the chat box and just let us know where you're coming from and what your name is, that'd be great. And then we can sort of get started. But just while we do that, I'm just going to share screen and put up our disclaimer that we need to put up each week. Sean, can you see that?
Yeah, I can, yeah.
Okay, great. So just, guys, have a read of that disclaimer. It's important information. And just while you do that, we're pretty excited this week. We've got a free trial of our software that we're putting out for 30 days, and it's going to be in the new year. And the reason why we're going to start in the new year is, well, there's a couple of reasons really. One is, you know, the end of the year represents the end of the highest time frame, and so where markets end up at the end of the year is absolutely critical for the year ahead in terms of the direction of that particular market. And we often see the biggest moves come just into the end of the year, or certainly into the new year. And secondly, it's going to give us a bit of time to sort of reflect on the list of people that are looking to take up our free trial. We're only taking 10 people, and so far there's 4 people that are put their hand up. And if you are interested, we definitely just want people that are serious, people that do want to learn, people that are committed. And if that's you, then please click on the link and fill out the details. And I'm going to put that up in a second. Yeah, tonight we're going to go for between 35 and 45 minutes usually. As I mentioned, we'll cover off on the major movers, which is going to be gold, the dollar, bonds, and equities. I think last week, you know, we pretty much nailed it. We called the Dow up, we called gold down, we called bonds still down, and we certainly called the dollar up, and we have been doing that for a long time now. So without further ado, I know there's a few new people tonight, so I might just go back to the very basics, which is, you know, the Trade Safely system. So essentially what our Trade Safely program is it's a group of indicators and an outright trading system that's comprised from those indicators. And it sits on top of this awesome program called Chart IQ, which is absolutely free. And so I just wanted to point out to some of the new people that I know, like in last week and the week before, we had some fairly technical charts up. You know, and the point of having those charts up, which has support and resistance and tracking multiple time frames and all these different things. But I just wanted to show you what the basic underlying system is. And, you know, for people that don't have a lot of experience, we don't want you to be overly concerned about, you know, the level of detail that we normally show when we go through the program. So I'm just going to run through, you know, how a novice would look to use our Trading Safely software. And so here's a chart of 2, which is a US stock. It gave a sell signal during the week. The reason why is because it was actually testing last year's high, and we'll pull up the details that reveal that a little bit later on. But essentially what happens is when we get these blue triangles that are pointing up, it's a buy signal, and the pink line is our protection line. So if price goes under that, then we need to exit a position. The brown line is a trailing stop. When price closes under that, as it did here, that would represent the end of that trade. And when we get buy signals, we look to take profit when we get these little red numbers. So at each point we take off 25% of the position until we either are completely out of the bought position or we've been stopped out as we were here. Now similarly, when we get a sell signal, as we did during the week, the profit taking points are from green numbers. So that's really the basis of the system. It's pretty simple, anyone can use it. So I just wanted to point that out before we sort of revert back to the screens that sort of most people are used to looking at over the last few weeks. So just on that, we might just flip over to analysing some of the global markets. First of all, we might take a look at gold. I mean, last week we said that gold was basically tracking under last year's midpoint, which was here at around this sort of 1190 area. It's still in a clear down channel. You know, to be wrong here, I think last week we mentioned it's got to be back over that sort of 1200 to 1210 level. So right now there's absolutely no indication or no reason to be long gold. If we switch back over to Chart IQ and we revert back to some of the common setups that or the typical setup that we use, we'll put in spot gold. Okay, so on spot gold, you know, we busted through these. This orange level in the middle here is an annual level. Right now, there's no support at all for the market. There is a minor level around 1130, which is where we held up this week, but really the levels underneath here are sort of a fair bit lower, around the 1060 area. So gold to me is still in a pretty bearish position, and I know last week we were talking about dust, which is an ETF that goes up in value when gold goes down. If I call that up, Sean and I have had calls on dust, but that obviously popped up from around the early 50s right up to 70. It's sitting at the top of a channel now, but certainly a breakout above the channel that's in can see that market move a lot higher. If we look in Chart IQ at dust, we can see just how far it has got to go. I'm just going to compact that up a bit. We touched on this last week, but we actually had a bullwhip buy signal, which is that green square here.
It was power play.
Sorry, I beg your pardon. Thanks, Sean. That's a power play. And it's taken out the recent resistance here, and all that space that you can see above is telling you that the market has a long way to move potentially. So we're still in long calls there on dust, and there's been no indication from gold yet to get out. So for me, the level's 1210 where I'm wrong, and on the downside, I'm thinking around 1060. Sean, what do you reckon?
Yeah, I've got the same. We go. I remember the original breakout point when we got above $1,000, which was a long time ago now, and we went to 1030, and then we came back below 1000 very briefly, and then it took off. So memory serves me as 1030 to 35 as being a big level as well. But yeah, 1066 is the same. Psychologically, if you made a weekly close below 1000, then I think that would have people throwing in the towel a little bit on these gold bugs as well. And then I would think next year we could get down to 850, which is the original high which got me involved in the markets in 1979, 1980. So the nearest support is still a long way away, that's for sure. So I think watching dust, it sort of hadn't been doing very much, and then on Wednesday with the Fed, it just took off. So and then just gapped higher the following day. So it shows how much it can actually move. One of the things that have been happening on dust was because the market had been going up, gold shares have been hanging in there. So the gold price might have been going down. The gold shares were just hanging in there with the sort of general bullishness of the market, and that ended on Wednesday. And that's why dust jumped so much Wednesday and Thursday. So, yep, no reason to change our view. Technically, that looks like it could go a very, very long way. One of the things that it's going to do, and something I always mention, is when you're somewhere that you haven't been ever or for a very, very long time, what has to happen is the market, if it's been going up, has to make resistance based on its own momentum. And if it's been going down, it has to place a pull based on its own momentum. I think we're going to show something on the Dow to show that. So until that happens, the trend is your friend.
Indeed. So that's gold. We still think it's going to bearish over time. We're wrong at 1210. We're buying at 1060 at the moment. If we move next to, I think, the Dow, let's take a look at that. Last week we're talking about like the angle of attack of the trend lines from the 2009 low. They're very steep, and they essentially drive where the market can go going forward. This is a weekly chart of the Dow Jones Industrials cash index. So on a weekly basis, we've broken above this channel line here. This space, all the way up to here at 21,000. We touched on that last week. But it's interesting this week, if we zoom into a smaller time frame, we're starting to get some different information. So if we just change this chart time frame now to daily, there's a couple of things going on. Well, first of all, is this little black dot that tells us that we got a sell signal the other day. But the other thing I was discussing with Sean just before we started is that one of the daily peak lines, which is effectively a form of resistance, has just moved up to price as of Friday. So what I'm trying to say there is this white line, which was resistance before the market broke out, has now moved up above price, and this is the first time it's moved since September. So the reason why it's moved and why I'm raising this, because it's significant, is because it is telling us that something significant is happening at that level in terms of either volume or range expansion, and it's of the order of significance that it hasn't had any reason to change for months and months and months, and yet it has changed as of Friday. And we can see back in September when we made these early two highs, when the same thing happened, we got a decent pullback down back into channel support. And I suspect that we are going to see something similar this week. So there's obviously a fair bit of volume that's been done at this level. It's caused this peak resistance line to move above price. If we hadn't had that significant volume or range expansion, then this line would not have changed, and we would have been none the wiser. But the combination of a daily sell signal and this resistance moving up over price is telling me, okay, I know the trend's up. We just showed you the weekly chart. The weekly chart's got a big gap up to the top here at 2100. So bigger picture, we're definitely still going up, but there's no reason now why we might not get a pullback to retest support. So that's kind of what we're seeing. A similar story with the S&P 500. The same things happen. There's been a daily sell signal. If we come back to Chart IQ and we move to Dow Jones cash, we'll probably should see a sell signal. Yep, there's one here up the top. What was also interesting was on UDOW. which is the 3 times leveraged ETF. So when the Dow goes up 1%, it goes up 3%, and it put a sell signal in the other day. And interestingly, when we look down the bottom at our support and resistance levels, it's banged straight into this annual level. So, and look, that's one of the advantages of the program, guys. You get all these levels well in advance. You can see them coming. You know where there's space. You know when to take profit. So there's a bit of evidence that we might have an intra-week sort of correction on equities at the moment. And just talking to Sean before we started, he mentioned seeing some buys in the bond markets as well, which kind of further adding to evidence of potential a minor reversal, if you like. I mean, bonds have been absolutely hammered, and in the case of TBT, which is an ETF in the US that mirrors treasuries. No, sorry, it's not TBT. I think it's TLT. Yeah, TLT. So in the case of TLT, we are coming right down into deep support areas, annual levels, final supports. I mean, under here, there's nothing for bonds. Bonds are a total car crash under these levels here. So, there's some reason to believe that we may get some sort of cyclical short-term pullback, if you like, before the bigger trend resumes. But there's no reason to think that the long-term picture has changed, which we've been talking about for a while now, and that's equities up, bonds down, dollar index up, and gold down in the short term, but longer term gold's going up and probably going up a lot higher. But Sean, what do you reckon about bonds?
The thing about bonds is the top was called back in August, and then we got some more sell signals in October. That process ended for me at the end of November, which is partly to do with option positions which expired with that exercised. There's a little bit of divergence there in between. In the European bond market, I've all got final supports, apart from the Buxel, which is a German very long-term bond. And it's the same in the US. So in the long-term US, so that's T-bonds, 10-year notes, ultras, they've got one final support. But the short end, like 5 years, is pretty much gone. So to my mind, those levels are critical, and they are critical at the beginning of next year. If we take those levels out on a weekly basis, as you said, there is no support, and yields are still historically extremely low. So bond futures could go significantly lower, which means yields going higher. So those levels really big focus for me in the new year, and looks like they're taken out. Looks like a major trade in the first quarter.
Yep. So we showed this chart. This is a weekly chart of 30-year Treasury bonds in the US, and the yellow lines are the up channel it's been in since 2011. We obviously broke that a couple of months ago, or a month ago in November, and we broke this monthly support, which is the red line. We're hugging to this down channel at the moment. It looks nasty on the downside. You can see the space all the way down here. There's nothing stopping this thing from free falling, other than a potential counter trend squeeze, if you like. But if we zoom into the daily level and see if it's telling us anything different, because that was a weekly chart. At the daily level, we're still under the monthly support. It's hanging on to this level for dear life. You can see the gap underneath it. A bounce would be fantastic as far as I'm concerned. It would be a great one to sell, because the critical long-term trend is broken, and it's broken broken pretty severely. So I'm kind of hoping it will bounce. But generally, what you hope doesn't happen in markets.
You just said that dreaded word. You said hope. Yeah.
Exactly.
When you I think the thing that stands out there is the rally just ahead of the Fed on Wednesday stopped at that red line. Yeah, so what bounce we had ahead of the Fed couldn't get over. Yeah, it wasn't much of a bounce, was it? It was a couple of days, and it stops right at that breakdown point.
Yes, it's spike low.
Exactly.
Back into
and
that.
So that was the first major resistance, and it's failed at its first major resistance, which tells you that the market is still weak. So I don't think we have to hope. I think I suppose we'd say it would be nice if we had a good squeeze or something.
Exactly right. It would be nice to add to the position.
Yeah.
Here's Aussie 10 years. I know we touched on that like 3 weeks ago, and at that point it was just breaking into this channel. It obviously back tested that critical quarterly level, which is the black line, got rejected, and it's now in the same sort of free fall category. So it doesn't matter where you look, bonds are still nasty, and all rallies are going to be a sell. But I guess, Sean, I mean, the market's pretty short bonds, so if you do get a squeeze, it could be a bit of a nasty one.
Well, yeah, as the algo pops, as Gilby calls them, they can squeeze the market. I think, we see evidence of that all the time. So markets have changed over the years, and so squeezes can really push things beyond where most people can maintain their core positions. So we're a little bit different. We wait for it to get to a level and then fail, and then say, right, fine. So yes, if they can squeeze, the market is pretty short. But based on the time of year, just for background for the big banks and American banks, their end of the year is normally November, and so proprietary traders in big banks and stuff don't necessarily have big positions on in December. They might have closed everything out. So they would normally look to obviously get involved in January, but they tend to wait a little bit, so they have all their meetings and strategy stuff for the year, and et cetera, et cetera. And so you've got to think of them as super tankers. They take a long time to stop, and they take a long time to turn around. So give it a couple of weeks in the new year, and then you see the big money starting to position. So we'll be joining them.
Maybe on the dollar index, been long and strong this one for a while. I know last week we sort of presented the case for why it was a buy, and we discussed range deviation pivots, and that was certainly a good entry. In fact, I think the low of that week was the monthly first down range deviation pivot. And for those people that don't know what those are, I'll just add them now. This is a monthly chart of the dollar index. These range deviation pivots are available in the Chart IQ program as well. And what we can see here is these levels. There's 3 up and 3 down. And when you're in an uptrend, when the market pulls back into this first level down, that's generally the buy zone. And certainly was a reason for me to add to my longer position. But that aside, it's powering up. We're coming into the end of the year. We can hang on to these levels. There's no reason it can't keep moving up to that first channel line there, which is up around 107. And then through there, it can just explode higher and just get pretty violent, really. And obviously, we had rates rising through the week, so markets reasonably, extremely strong is probably the best way to put it. If we zoom into the weekly level, maybe add in some support and resistance levels. Okay, so it's just telling me that the market's still extremely strong. A back test of the 102.12 area is probably going to be a buy with a fairly tight stop. And the upside is plain to see. So I guess the reverse of that is the euro. That was pretty exciting through the week. It took out the low from last year that we've been waiting for ages now. So this is a monthly chart of the euro. You know, we touched on it last week about the angles. So all these white lines that are pointing down, sort of indicating the long-term trend. And at the moment, the market's hanging onto this break line by the thinnest of margins. And if I just take this into a lower time frame, drop it into, say, weekly. Now, we touched on this last week. If we can break this through this line here, really, it's going to drop down to sort of 95 cents pretty fast. So, you know, it looks like a car crash. No reason to be trying to buy the dip there. Sean, what do you reckon?
No, it looks pretty poor. I think it's gone. The other thing that came up after the Fed Wednesday was we had sells on the Australian dollar, sells on the Kiwi. We had buyers on dollar CAD. There was also a continuation signal on the yen as well. So the yen's already been trading for a while. So when we get signals based around a major news event, such as the Fed, that gives it some extra power. So all of those are pointing to the US dollar going higher, and it's going higher against just about everything. The Australian dollar has been doing reasonably well recently, and that reversed very, very sharply. And the Canadian dollar has been doing okay as well. So we're starting to get a process where the US dollar is strong against everything.
Okay, so here we've got a daily chart of the Euro US dollar in Chart IQ.
I think that's a good example of a really big squeeze. I mean, it's a little bit difficult to see on the scale, but we went from 105 up to 108.5, I think. Yeah.
That's right. That was an absolute pearler. So we made a marginal low. This is algorithms eat your heart out. They love this. Make a marginal low and then just stop everyone out back to the former resistance. And you know, it was like a pendulum. That was the top of the swing there, and then to new lows. And if we look to the bottom study, you know, we've taken out this bottom orange line, which is a major annual level. So that tells me for the euro potentially a whole lot lower. I think from here, if it was to start closing back above 108, I'd be paying attention. But right now, you know, we got to the end of last week, right under this final resistance. You know, typically that wouldn't happen in a stronger market, so that looks pretty poor to me. What's left?
The Australian dollar, might want to look at that one.
Yeah.
My new lows having been pretty good.
Look, that's spent a long time in sideways period. So you're right, Sean. I mean, it is indicative of something, a change ahead. You know, look at this chart. That's the daily chart of the Aussie US dollar. Start of the year, it was as low as, you know, down at 68. And then all of this year, it's been in sideways. Effectively, what sideways is it's a compression of midpoints across different timeframes. And, you know, effectively, it looks right now like that battle has been lost, and along with the dollar index and the US dollar pushing higher, and you know there's this sort of critical closing level from last year around 72.80. You start breaking under there, and it can get pretty messy on the downside pretty fast. And what are your thoughts there, Sean?
Yes, I'm pretty bearish of the Aussie dollar. There's a few fundamental reasons. I think that it's not going to do very well as well. But technically, as far as I'm concerned, it's on the verge of going. And I think the other thing is a lot of the levels from this year, when they reset themselves, so the half yearly and the yearly levels, and the quarterlies, they're all going to be above price. So that just reinforces this sort of like stepping process through time, which says that the higher time frames are all above the market, and so it opens up space for them. Looks pretty bearish.
Yeah, and certainly this, look at the current candle from today. There's space all the way down to 69. If we look at the studies below, there's space from 72.80 right down to the 69 level. So potentially can fall pretty quick, and retest last year's low, which was that sort of 68 level. So that's one to watch this week. In terms of the pound got a bit of a touch up through the week as well. That put on a pretty decent counter trend correction, and was a nice sell around that sort of 127 area. In terms of supports, we look to the bottom study, and for the new people that are on, the bottom study is tracking support and resistance from, well, effectively quarterly, semi-annual and yearly timeframes, so major levels. Timeframes.
I think the thing there on the pound was we didn't quite, you see that blue horizontal line where we rallied, and we didn't quite make it. Got very, very close. I was watching that like a hawk. We never actually got a sell signal there because it didn't quite reach it. But that is a major resistance level, which is about 128.24, I think. It's going to close above there before we get remotely bullish. Yeah, was watching that and it just didn't quite happen.
And here's the weekly chart of the pound. Yeah, so basically back tested this old monthly level, failed. We've mentioned this a few times. The long-term angles, they're all down. The pound looks sick as a dog, and certainly a monthly close back under this low here, down here, is going to spell big trouble for the pound, and can fall pretty quickly. Some of the levels as you move down, they get pretty nasty pretty fast. 107, 94, 89. Pound's not looking good.
Yeah, thanks for that.
Yeah, sorry, mate.
I actually remember when it crashed in the early 80s. I was head of an FX desk at that time, and I think we got down to 104.75. Charts from those days are not particularly good, so it might not show up on a chart, but I remember that being a very, very big level. It was extremely volatile. Sometimes the spread would be 50 ticks. So people imagine how difficult it is to market make when it's 50 tick spread, but as opposed to half a tick or one tick what it is now. So 104.75 for me is a big level. Obviously, 1 is big as well. So we'll see.
And I know Euro Pound, you've been pretty active on that one, Sean. Let's take a look at that one.
Yes, it's been had a nice trend down, and it was pretty quiet last week. Didn't really do very much. It's sort of just about hanging in there. The trend is the shorter term trend is down. If it takes out, it's just the spot. Yeah, the spot level is we've got what's called a control point, so point of most time, which is at 83.70. We've just been rotating either side of that over the last week or so. So what I'm waiting for is a day where, for it to be bearish, the high of the day is around over 370 when we break last week's lows or this month's lows, and then we can fall again and support. So as you can see, there's lots of space that can fall along. So could be that the pound against the dollar goes down, the euro against the dollar goes down, but actually the euro falls quicker than the pound, and so the euro pound still falls as well.
Yeah, and this is a 2008. It's 2008 back here. It's a monthly chart. We're sitting right on the top of a very long-term channel. So certainly, if it drops back under here, closes under here, like at the end of the month, then it's got 10 cents to fall basically. So watch the euro pound through this channel level. Looks like a car crash lining up there. In terms of some of the stocks that sort of came up this week, there wasn't heaps. One of them was Because BC came up. I just want to run you through why that one was a sell signal. Often, and the reason why is because we hit this annual level at the top here, and typically what you'll find, I'm just trying to contract the chart so you can see the that settings. Okay, so there's a sell signal there. I don't mind these signals where they sort of break through resistance and they charge up to an annual level for the first time in ages. Typically, you'll generally get some sort of reaction, which is what we're seeing there. And it happened on quite a few stocks this week, which is another one. I think I showed this at the start too. Stock 2 in the US did the same thing, came off just shy of an annual level, pulled back into support. So that's still a valid sell signal. Another one was HES that we mentioned. It's that had sort of dual sell signals at resistance there. It's doing a bit of work, but that's at an annual level as well. So certainly a break back under this 61.50 level will mean downside pretty quickly.
There was FLS as well.
FLS, we put this one out as well to our subscribers. You know, that was a we like the look of these trades straight into our resistance lines. We get the sell signal. If we look below, it's into an orange level, which is an annual level. It tells me even more that's a strong level again. It's gone back to support now, but the program's not telling us to buy anything at the moment, so it's still short there. Another one that Sean put out through the week is PGE in the UK. It had a good run off support. It basically broke down and back tested the breakout point. You know, we see look back earlier in the year at this level here around 1950. We got the buy signal. You know, it busted higher very quickly. And it's back testing at basically an annual level there, so we're watching that one closely. I can't think of any other positions. Pot. If we just have update on pot.
Sort of quite ironic that we forgot it, wasn't it?
Yes, that's right. So pot has been in a sideways period all year. It's one of the largest fertilizer companies in the world, and look, it broke out at the moment. It's just testing back under resistance. So we bought some cheap calls there, obviously monitoring that for an exit if it was to go much lower. But by virtue of the fact that it's been going sideways all year and then to pop out and make a new high, I'll be surprised if that was to turn down and go lower again. But we're watching that one pretty closely.
I mean, that one sets itself up for the new year because all the bigger time frames are going to go underneath price and create a lot of space. So I think the timing's a little bit early, but they're certainly very interested in adding to that in the new year. The only other one that came up was MCK, N for mother.
That's a US stock.
Yes, US, yeah. So that came up, yeah, so that came up on the day of the Fed. Gapped lower massively in November on some, must have been results, I assume, pretty horrible. And so what it's done, the perfect thing there is it's come all the way back to what was the breakdown point, that major blue line that had been there for a very long time. Comes back there and stops stone dead and produces a negative signal.
Yeah, so that looks good. Back tested, filled the, kind of filled the gap into resistance and now sell. And, we just painted that picture before. The Dow index is giving some short-term corrective indications. So I don't know, kind of feeling like we'll get a bit of a pullback, which to my mind will get bought heavily in equities, and the picture hasn't changed, Sean. So look, for everyone that's new tonight, I'm just going to, if you want to get on, be part of the free trial, I might just have to stop presenting. If you want to be part of the free trial, there's a few spots left. I'm just going to put the link through now. Okay, so there's the link, and feel free to jump on board, and we'll get back to you, I guess, between now and the end of the year for the people that are successful, and we'll look forward to working with you in the new year. So that'll be awesome. So Sean, have you anything else to add, just to wrap it up?
Just the final thing for the subscribers. I always write a big macro report between Christmas and New Year. It's looking at the major markets and seeing potentially what the opportunities are for the next year. So what are some big strategic trades? Looks already as though there's potentially quite a few of them. So subscribers will get that report probably about the 29th or 30th. And then we're very active for the first few weeks of the year. One of the other things is, for me, quite often certain markets will form a major high or low between Christmas and New Year, and that proves to be the high or low for the whole of the following year. So that's one of the things I'm trying to find and look for. So that's what I'll be doing. Not really expecting any signals this week. It's going to be very thin. Existing positions are fine, and monitor them, and then we'll see. I will be scanning everything and seeing what comes up, but most of them won't be actionable until we'll see where we are there.
Awesome. So on that note, guys, happy Christmas, happy New Year. I hope it's going to be an awesome 2017, and we look forward to working with you. So signing out till next week.
It's Christmas Day next week, is it?
Well, yeah. I guess we'll just have to.
I'll be on the night wine, God knows what. So yeah, so not next week. I think the following week is New Year's Day, is it? So not sure what we're going to do there. It's a bit unfortunate in terms of timing.
We'll see what the market's doing, and I reckon if there's something to report, then we'll be here and we'll be ready to update.
Yeah, maybe we can do it a couple of days early, like the 30th or something.
Yeah.
At least that's yeah. Okay.
All right.
Okay.
Thanks, everyone.
Thanks, everyone.
Yep. We'll see you on the other side. Bye.